Good afternoon, everyone. And thank you for joining us today as we're going to have a very interesting discussion about the transformational power of venture capital. My name is Raquel Polanco, and my day job, I am a senior VP vice president, capital capacity planning engagement manager. It's a mouthful within the HR transformation at Citi. And on my volunteer job, I currently serve as the EVP of operations for Alpha New York chapter, and soon will be transitioning into the president role. So excited there. Our goal today, and we hope that we can achieve, is that we get a very educational conversation. You get information, and this become an educational piece panel with our great panelists today. And so as we go and demystify what venture capital is. So we will need your help. So make sure that as we go through our conversation, that any questions that come to mind, feel free to pop them on the live chat. We'll be collecting those, and we will at the end we'll have a section to go over your Q&A. So we will make sure that your questions get answered. So without further ado, I will go ahead and introduce our fantastic panelists. Our first panelist is John China. He is the president for Silicon Valley Bank Capital. John is focused on providing best fit financial solutions, insights, and connections for Silicon Valley Bank clients. Over his 24 years at SVB, John has constantly and enthusiastically made connections between entrepreneurs, investors, the Fortune 500 winemakers, and now he spends most of his time focusing on global limited partners. As president of SVB Capital, John is responsible for SVB funds management business across venture capital, funds of funds, and direct funds. In this role, he is responsible for growing and scaling the fund business, as well as the SVP family office practice, which include Lyft, which is one of SVB managers and limited partners matching platforms. John is a member of SVB Executive Committee. Previously, he led North America technology banking teams, specializing in consumer and enterprise software, frontier tech and hardware, fintech, clean energy, private equity, BC, and premium wines. He has also been responsible for the company's corporate venturing, early stage banking services, SBB Global Gateway Program, and the credit solutioning groups for corporate finance. So welcome, John China, for being with
Thank you.
us. Our second panelist, it's Damian Rivera. He is Damian Rivera began his tenure as the CEO of Alpha, the Association of Latino Professionals for America, one of the country's largest and oldest Latinx membership association, and he joined us in September 2018. Prior to joining Alpha, Damian was a managing director with Accenture, focused on the energy industry, and led the Hispanic American ERG for 6 years there. In addition to his diversity work during the tenure at Accenture, Damian served as the AICPA National Commission on Diversity and Inclusion, and is also a member of the Columbia Business School Young Alumni Board, as well as a member of Angeles Investors, a Latino-focused angel investors network. Damian has spoken at numerous corporate events and national nonprofit conferences on a variety of topics, ranging from executive leadership to D&I to the role of technology in business. Damian has an MBA from Columbia Business School, and a BS in chemical engineering from Rutgers University. He bridges the nonprofit and corporate sectors, bringing together management experience with authenticity, a drive to impact the life of every person that he meets, and a passion to service to others. He is married to his high school sweetheart and has two children, Damian Jr. and Ilanis. Please welcome our amazing panelists, John China and Damian Rivera.
Thank you. It's great to be here.
Great to have you. And thank you for having me here. I'm moderating this panel, so I'm very excited. So let's just chime in as we chime in into the jump into writing the questions. This we want to make sure this is a candid session, a candid conversation. We will demystify, attempt to demystify, and discuss why BC is important and how you can leverage its power to develop your career and generational wealth. So with that quick intro, let's jump right into our line of questions. We have a lot of good questions here, and hopefully we can get a lot of insights from our panelists that you can take home, you can take away with you. So first question, and this goes for John. John, so what is, and before I even ask, just being the devil's advocate here, there's a lot of us in the room on the live chat that don't really know what BC is. Or sometimes we think we know and then we forget. I'm like, let me read up on it. So let's take it down a notch. Let's dumb it down a little bit. Maybe start from a very basic definition. What is venture capital, and why has this been a mystery, if such?
Well, thanks, Raquel. It's great to be here. And yeah, apologize for a long-winded bio of mine, but it's just to say that I've been here a long time. It is my 27th year, actually, and it's hard to imagine I've been here in one place. But I have had the privilege to be in the seat and be in the intersection between venture capital and entrepreneurship. And I do think it's an important question when you try to define it. The first I would just say is that it is an opaque area of the alternative, what we call the alternative private asset classes. Most people are pretty familiar with real estate. They're familiar even with private equity. But when it comes to venture, it's the smallest of that definition of the alternatives. It hasn't been around that long. If you think about it, venture capital didn't really get started until the 1960s in the United States. And for the most part, over the last 50 years, the lion's share of activity have occurred with about 92% of active venture capitalists today are white males. And here's what's troubling. They all went to, on average, 5 schools, 5 universities, that's it, when you break down the math. I mean, of course, there's representation across a large, much broader. But as a consequence, it's been relegated to a very small corner of the world, right? Very small percentage of people get to enjoy it. But what is venture capital? And it's important that we make a distinction between small business, small, medium enterprises, and venture. The definition of venture capital is taking institutional investor dollars, putting into startups that typically have characteristics that are differentiated from their small business brethren because of growth statistics. The average venture capital startup is looking to grow at a minimum of 40% or higher, maybe 100% annum of growth a year. Think about that. That is an incredible growth. Most companies in America grow single digits at best. So the fact that these companies can show growth of 40, 50, 60% annum over the course of their life before they go public is really the distinguishing factor. The other distinguishing factor that we use is gross margins. Most of these companies have high gross margins, typically in the 30s or 40s percent, that really distinguish them again from their other small business that you and I are much more comfortable with understanding. That is typically the life cycle of a venture capital. A backed company will go through, typically, just to give you a sense, 9 years of private and raise about $100 million at exit. That is the statistics over the last 12 years that we've tracked here at Silicon Valley Bank. So think about it, $100 million raised by founders of a company, and over almost a decade that these companies remain private before they go public. Some of the names you'll know today, the names that people are keeping an eye on are Instacart, Stripe are two names that people are keeping an eye on. If these two companies break through in this IPO window that exists today, as weak as the markets are, those are the companies that will sort of lead the way for the rest of the startup ecosystem. So that's a long-winded way to share with you a little bit of the color of venture capital and what differentiates it from small businesses.
Thank you. Amazing. I think I'm already learning and getting educated. I appreciate your long-winded response. Definitely much needed. Let me just then, as we talk about that, kind of moving in, and this question is for you, Damien. What has investing like done for you, personal growth and professional career, as we talk about venture capital and potentially, jumping into that investment, becoming an investor in that space?
Yeah, so appreciate the question, right? And of course, on cue, my dog is starting to bark over here, so I apologize if you can hear any of that. I'm going to start with a little bit of a story with respect to investing, because I think it hits on so many points that John was saying along the way. He used words like comfort. There's intersectionality that happens with respect to the venture capital world. For myself, my experience with investing before I was taught about it was the movie Quicksilver. Now, for those that don't know the movie Quicksilver, look up Kevin Bacon and you'll go ahead and find a little bit about it. The beginning of the movie is about investments, right? It's this guy who's this big investor and he loses everything and then becomes a bike messenger, hence the theme of the movie. And so that was my understanding of investing. Stay away because you're going to lose everything. And that was my view for a long time, up until right before I was up for partner. I had another gentleman, Latino, say, "Are you ready for that promotion?" I said, "Absolutely, I'm ready for that promotion." He said, "Are you sure you are ready for that promotion?" I said, "If you're asking me twice, it means not only am I not ready, but I don't even know why I'm not ready right now. So what do you mean, am I ready?" He said, "I'm not talking about the work you do. You're obviously ready from the work you do. Do you understand how to maximize your wealth in going into that position and what it means to do that?" And that started my journey of understanding the investment world, understanding how not only you start with small investments, but then understanding how angel investors play into the VC world in a longer term. I will say this, for anyone that's watching, understand this. If you are unsure, if you feel like you don't know enough, the first thing is saying, "I understand I don't know enough, and I'm going to ask some questions. I'm going to watch and hear from people that understand the world so I could start building up my knowledge to go ahead and start building up my wealth over time." So from an investment standpoint, I will tell you, my wife and I, at that point, started getting very strategic about how we thought about it. And I will say this also, I am not a financial advisor of any type, shape, or form. So anything I say throughout this whole thing is not financial advice, but you understand where I'm going with it. What we said is we know we need to start with the basics, right? We've been doing the 401k investing. Yes, we know we're planning for that. Kids' college funds. Yes, we know we have that in place. And then over time, starting to understand, how do we broaden out? And so there were a couple of things that we did. One piece was around not investing in specific companies, but investing in ETFs to go ahead and get more comfortable. And in doing that, starting to understand what companies were in those portfolios, listening on the investor calls, reading the annual reports and the quarterly reports so that we can understand better about it. From there, we started to dig a little bit more into what is this whole venture capital versus private equity versus angel investing, and how do those pieces play, and what do we want to do with respect to engaging in that world. And what we found out pretty quickly was this. It's a small world, and when you start engaging in it, you start meeting a lot of the same people at different events, and you start to be able to build up these relationships where you can ask those questions. So I'll say this, from an investing standpoint, start small. If you're feeling uncomfortable, start learning about it. For those that are further along in your career, the more you understand the whole investment ecosystem, and venture capital is one piece of that overall ecosystem. And oftentimes it's one that creates a visceral reaction of, I don't want to go there. But that's why we're having the conversation here, so that we can understand venture capital. For you to be able to get big enough to demonstrate that scale, oftentimes it starts with an angel investment that occurred from family or friends or those that you trusted, to then go ahead and move into that VC side. So from an investment standpoint, what I say is be open to learning, make sure you're asking a lot of questions, and make sure you're listening into things like this from trusted sources that you can start moving forward on.
Great. Thank you, Damien, for that insight. Very helpful. and also myself, right? I come from, third world country, the two out of college that went to college out of 7 kids, and investing is not something that you don't even have a bank account, right? So when I came to the United States and slowly, creating that, that wealth, creating more awareness, 401k is not enough. So what else can I do? Now I am, diving into other alternative options of investment for retirement planning, Roth IRA, rollover, IRA and such, broker account, and really, to your point, investing on those ETF that I don't necessarily know much about, but let me just do sort of like a medium risk adverse investor and start getting my hands wet in that space, and really getting to know, like, where really my money is going on, where is my putting my money, right? And how is that going to multiply for the future? So I really appreciate your insights on that. So flipping a little back into career, right? So now that, we kind of went over the definition of what venture capital is. So how do you, and this is for you, John, and feel free to jump in, Damien, if you have some insights as well. But how do you move into the VC, space from a career perspective? It could be, a traditional career route, or how was it for you if you were not in that space before? And what would be your advice for some of the audience that really might be interested in really pursuing a career in venture capital space?
Well, it's really hard. I will say it has been relegated to a very narrow set of folks up until now. But I think, just to give you guys a little bit of background, after the George Floyd murder, for SVB Financial Group, our CEO, Greg Becker, made a determined decision to try to change the arc of this industry and tap me to support him. And so we use a common language phrase here that we want to change the color of venture. And the way to change it is to bring in participants on the investing side. A lot of people focus on the entrepreneur side, which we also care much about. So being an entrepreneur, first and foremost, we should all take a step back. Venture capitalists don't exist if entrepreneurs don't take risks to start companies. That's first and foremost. But I do believe that at the end of the day, when you look at financial markets that go back, to the turn of the century, is that sources of capital distribution is sort of where the power is. And so my attitude is we need to get more people of color into our industry. And the only way to do that is to sort of change their arc of where they normally go. As Damon described his very illustrious career, right, as a consultant in one of the top 3 firms in the world, right? That was an incredible career path for him. What we're arguing is, what if we could take kids that would normally take those jobs, but maybe convince them to come into venture capital first. And we start our first program with the Black Venture Capital Consortium with Malcolm Robinson. And our goal is to have 100 SVB fellows in the next decade, but we might get to 100 even before then, where we're placing top graduates from HBCUs into venture capital firms. And we're the intermediary that pays their salary to go into these roles. And it's a 2-year program. And listen, like anything else, right, Damien, when you made that decision to join your first firm, it could have gone either way. You're no longer there. It had an incredible effect on you. And so our attitude, Raquel, is to try to get kids right at graduation and steer them into venture capital. That's one path, right? Becoming an SVB fellow. That's not a lot of people. It's 100. Moreover, what we're seeing, the traditional path of going to work for a venture capital firm, that's traditional, is probably not going to get you the results we're looking for at scale. And so what we're seeing is a lot of operators coming into our industry. So these are entrepreneurs that first become entrepreneurs and then say, listen, I can do this. I know how to build a company. And then with the money they earn from that exercise, then they start angel investing on the side. And then from angel investing, they build a track record. And with that track record, they can then talk about raising their own fund. And so similar, SEB made a decision to take some of its own balance sheet money from the bank and create a program called Catalyst. So we're dedicating $10 million a year for 10 years, that's $100 million, to fund first-time Black and Latinx GPs, general partners. And we've made already $20 million in commitments to 11 managers. And the goal is, by the time we're done, there's 100 new managers that otherwise wouldn't have been able to get started. Similarly, we raised $150 million fund of funds targeting emerging managers. These are first-time managers or second-time managers with a little bit more experience than the Catalyst program, the balance sheet program. And in this $150 million fund, we convinced our limited partners that are global to trust us with their money and show that these new managers that look different, that don't look like the traditional set, can in fact generate the same level of return as the more traditional managers I've been speaking about earlier. We call that, by the way, alpha, when you're able to return above return. And when we talk a little bit about career choicing, what's amazing about venture capital is the amount of alpha that one could create. It's just the ability to create outsized wealth creation. And that's why people come into this industry, because the power to multiply wealth multiples versus more traditional public stock and bond investing is dramatic. I mean, the differences are multiples different. And so the thought for us is, if we can start funneling capital to people that look different than the traditional venture capitalists that are on the main cities of today, then I think in 10 years when we look back, we have made a little dent in the universe in terms of the kind of people. Why is this important? I want everyone to hear this. We know it's important because we track these venture capitalists. Underrepresented minority general partners tend to invest in people that look like them.
Yep.
No dissimilar, by the way, to the white managers that tend to invest in white entrepreneurs. And so we see a path over the next decade where underrepresented minorities with capital will actually over-index towards entrepreneurs of color. And that, to us, is very powerful.
Wow.
Hopefully that helps.
That's amazing. Yeah, so that's great. I don't know if you have something to add, Damien. I'll give it to you. I had a little follow-up one on that one, but please.
Yeah, so I'll just say this, right? I mean, one of the things throughout this conversation that I love is for those that are newer to the area, which I think a lot of folks, it's going to be newer conversations, you're hearing language that you probably haven't necessarily heard before. GPs, LPs, what does that mean? How does that translate over to the power center that John was talking about of distributing the money, right? Mm-hmm. And that's one of the big, one of the most important things that we can have, I would say, over the course of the next, call it, year in this focus on wealth creation. It's a lot of the destigmatization, if that's really a word, but right, destigmatization of this area is understanding the vocabulary that goes into it. Mm-hmm. So that people can start translating what their day-to-day looks like from a wealth standpoint into this world. And then for those that are a little bit further along in their careers, being able to have those conversations with those students or early career folks so that they can start shifting the trajectory into this being a potential area of engagement or a potential career path. To John's point, it's very hard late in your career to then switch over into VC. There's certain very specific skills that are looked for. There's a track record that's looked for. And so the earlier you're able to understand what is needed, the earlier you're able to understand what that world looks like, the vocabulary of that world, getting more comfortable with it, the better you'll be at being able to transition over. And that transition does not need to directly go into being a someone that's a GP, right? Essentially the person that's distributing those funds at the end of the day. Yep. It could be a lot of our alpha folks are finance and accounting related. In those roles, understanding how those deals work, that could be a great entry point into a long-term career in the venture capital space. So I just wanted to make sure that that's something that people are thinking about.
Yeah, Damon, I'm glad you bring that up. I mean, we talked a little bit. One of the questions I know, Raquel, I think you're going to head to is, maybe I want to be a venture capitalist. Maybe I don't. The one thing I will tell you, it's a pretty lonely job, right? You sign up, you give your commitment, you and a set of partners. Typically, partnerships are small, 3, 4, 5. Some of the firms that have been around since the 70s get really big, but still, on average, 20, 30 partners maximum. You're committed to 10-year relationships to your limited partners that give you the money. And you have to return back multiples. If you don't return back multiples, you probably won't be around for multiple new funds. But not everyone is cut out to be an investor. But I love, Damien, what you're saying, which is the ecosystem around the VC community, and which is, I consider myself a practitioner, I'm not an investor. I run a platform of investors, but my career has been around banking and serving entrepreneurs and venture capitalists. One of the discussions we're having with Alpha and Damien is, can SVB Financial Group Alpha create a very similar program like we did with the Black Venture Capital Consortium to train next generation finance professionals in our industry? Because today you have to go through a Big Four, wait to get your certification, and then work in traditional finance, and hopefully then move over into venture. We think we could streamline that in a partnership with Alpha, where we could create next generation finance professionals for venture capital in a much shorter time frame. And that's a great example of where I think we're doing differently than the past. So I'm very encouraging folks to consider roles that straddle the venture ecosystem as well, if VC investing is not your thing.
That's great. I mean, I love the program that you just mentioned. It seems that, SBB is piloting ahead and executing some of those strategies to really create more awareness, and actually having the programs ready to target a younger community to follow the path right out of college, right? To jump into venture capital space, and you will help them, develop as career development and professional development in that career path direct, without having to pivoting after many years of Big Four experience going into it. So that's amazing. Thank you so much, John, for sharing that with us. And I hope that our members platforms, like our undergrads that are coming, graduating, can learn more about this program, and this spark an interest for them to pursue a career right out of college. So thank you so much for sharing that insight. So in terms of investors, right, you said I'm not an investor, right? So what other roles in venture, are there besides investor? And I think you spoke a little bit about that. You manage the people that invest, the entrepreneurs. Will that be the other side, right? Or can you share more with us?
Yeah, I mean, they're the people that get that run the fund, that manage the venture fund, typically 10 years in life. And then their job is to, what I say, deploy capital, right, into startups. But someone has to support the startups. So there's all types of roles inside a venture firm. There's typically marketing roles. So for those of you on the line that love marketing, love to share sort of your vision of how a brand comes to life, or when you think of product market fit, we all just woke up to all the Super Bowl ads. We're all asking ourselves which ads worked, which ads didn't. I was interested to note how many venture-backed companies were Farmer's Dog got me, the dog story, growing up with your dog. Farmer's Dog is a consumer-backed, VC-backed startup, right? CrowdStrike, you saw that Trojan horse that went over the cliff, right? Those are all, they need marketing support. Those VCs don't come up with marketing, okay? They need professionals to help them think through, how would we create a commercial for our brand, for our startup, or for our funds, companies. There's operating roles to support all the investments these managers make. Someone's got to be there to make sure that startups have all the things they need. HR is an important function for those of you that are HR focused. Hiring top talent inside these companies is really hard. You're competing against Salesforce, Microsoft, and Google, who pay a lot more cash than a startup does. And so HR talent is really, really valuable. So last one is legal. Legal, you have no idea how important legal roles are in venture capital. It's some of the most privileged opportunities of all the roles that exist. And so thinking about law, if law is of interest to you, focusing on startup law is really powerful. And there's usually a few firms you can start with to get a lot of information, but ultimately almost every law firm now has a venture practice.
Awesome. Great. Thank you. So I'm pivoting a little bit into, dabbling about investment opportunities. So Damien, this question is for you. So what three key elements must an investor in investment opportunity have for you to jump?
Yeah, I mean, I'll say this, right? I mean, I'm still in my learning process too, and I'll give a little bit of context and background to that. So there are two things that I have for myself to learn. One is I'm an LP in a Latina fund that was raised, so Chingona Ventures. So in her second fund, very specifically, I went into there, one, because Samara is amazing. So someone that knows what they're doing. Two, Someone that's trusted, comes with a brand that is trusted in the community. 3, it is the types of investments that she focuses on are ones that I can be proud of. My wife and I, we can be proud of talking to our kids about and sharing that with our kids, right? So that's one aspect to it. Investments that we can be proud about. On the other side of it, not even the other side, but sort of call it parallel to that, I'm a member of Angeles Investors. It's a angel investment group, Latino-focused angel investment group. Started mostly in Chicago. It's throughout the country. I believe over 100 investors are part of it. And for me, in being part of that group, I'm able to invest in earlier stages for Latino-focused startups. But that's where I'm learning a ton, because I'm not doing any single investment by myself. What I get from it is I'm able to do the evaluations, understand not just what the financials look like, but what does the team look like? Does this look like it's something that can go someplace? But then also listening to others as part of the group and hearing the questions they have, so I could start adding to my list of these are the things I need to check when doing my due diligence for investments. Essentially at a high level, things that I like to invest in this space, I'll say it's a very small percentage of my wife and I's net worth. This is not where we're throwing all our dollars, right? These types of investments are very risky, but that's why you get the outsized returns, right? That's why you need to look for those outsized returns. But we have a very small percentage of our net worth there. We look for things that we could be proud of. We look for teams that we believe either have shown that they could do it before, that they've already done it and now they're doing it again, or that based on the type of team that was put together and the chemistry that's there and the early results, this is something that we can move forward with. So those are some of the things that I think about. But the biggest thing I'd say is just being involved in the ecosystem. I get to learn so much from the questions everybody else is asking, so I could put my my personal viewpoints together.
Awesome. Thank you. Thank you for sharing that, Damien. And I'm still, going. I'm gonna go a little back and forth about the career. Really interested in making sure that our audience really walks away with, with a great insight to be able to decide if they want to go into a BC, career trajectory. So, John, going back to that career piece, like what is the experience that that's needed? And I know you kind of broken into 2 pockets. You said you have some programs that are targeting for people that go the trajectory route, as getting the experience first, working for a big 4, gaining the financial background, and then jumping in at a more experienced level. And then you really want to target and solve for that experience right out of the ground, right on the grad. So in terms of those 2 pillars, what is the right experience or skill set that you would say someone needs to be successful at a career in venture capital?
Well, I'm glad you brought up, I think she's a really interesting person, Samara Hernandez, who Damien was talking about, Chingona, which is so funny because it's translating to badass. We made an investment in her too. So without talking to Damien, we talk about these network circles are very tight. Through our Catalyst program, the one I mentioned from the balance sheet investments, we led her second fund. So we're very excited about her. She's an interesting person to talk about in answering your question. She's a Goldman Sachs exec, right? She came through Goldman Sachs traditionally. She knew she had the skills to work at Goldman, and she did really well. But in her heart, she always wanted to make early seed stage investments, which are the riskiest of riskiest investments. And she just shows incredible determination. So she was an example where while at Goldman, she built her own track record by making her own personal investments. So that's one way to do it, to build your own track record. The only other route would then be you successfully create a company. Like if you create your own company, and even if it fails, if you could show that you built a product that people wanted, it didn't maybe work out, but you can show that traction, that's another way to get started in venture capital. You can say, listen, I know what it's like to be an entrepreneur. And because I know what it's like to be an entrepreneur, I could probably figure out who to invest in. The grit, right? They show a certain grit, resiliency. The third way is to work for a venture capital firm. Go work for a venture capital firm. Get trained properly. My argument earlier was there's just so few of those opportunities available. Mm-hmm. But I would say these are all the ways to do it. You could do it on your own. Go a traditional route with either a big four accounting firm, an investment bank, and then start to invest little by little. Like Damon said, this should be very small percentage of your total net worth, maybe 10% max. Just to give you a sense, the US pension system in the United States takes about 20% of their liabilities, of the money that they owe pensioners, and puts it in venture capital. Only that 20%. 80+% is put in traditional liquid securities and bonds. So as a general rule, these are the richest pensions in the United States. It shouldn't be too dissimilar for you as an individual. But if you want to start making some investments, Damien gave you one group. AngelList is another group that gives you access to early stage. I wanted to point out what's happening right now in the world are private banks. So again, not always great access for us as Latinos to have access, underrepresented minorities to have access to private banks, but all of you should have access to sign up for a private bank. And most private banks are now opening up pools of opportunity to come into alternatives. So SVB Private, my sister company, the private bank, we now are putting SVB Capital funds available to SVB Private customers. And they have unique access that otherwise only large institutions would otherwise get access to. So one access point is call your private bank and ask, do you have a program where I could start investing on my own, in my own account? So that's one way to tackle the problem. So I guess to summarize, start investing, create your own track record while you're working for a good company that's paying you a good salary. 2, take a leap of faith, start a company yourself, go prove that you can build a company, a startup, and then use that experience to try to go then raise a fund after. And then 3rd, go work for a venture capitalist. Those are typically the 3 ways to get started in this industry.
Amazing. Great. Thank you for that insight. So in terms of now becoming an investor, so how do you move into the VC space as an investor, and relates to, what's the minimum amount that you have to invest? And I think you mentioned something about exit strategy or entry strategy. And there is another, word I want to throw out there, syndicate. If you can walk us through and give us a little flavor, what does that all mean? If you want to venture into the space as an investor, right? If you want to get into and put in those dollars,
We probably need another class just on that question alone that would last about.
It was a loaded question, I know.
But it's okay. The way we share is there really are 3 phases of investing. There really are only 3. People could break it up more, but you got to know who you are, right? Couple things. If you decide you want to be an investor in the venture space, remember things. You're going to say no a lot. You're going to tell people no 9 out of 10 times. So if you're comfortable letting people down and saying no all the time, then that might be good for you. Like, you might be good for this, because if you say yes all the time, you're probably going to lose money. But there's 3 categories. There's what's called the seed category. These are really early stage bets. These are when someone comes to you with an idea, a business plan maybe, but there's no product, right? It's just an idea. And the product is still not quite built. You're probably building what's called an MVP, a minimally viable product, to showcase to your investor. And these are called seed investments. Typically, seed investments are about somewhere between $250,000 to $1 million. And those can be syndicated, Raquel. 3 or 4 angel investors will come together and pull that money and give to an investor or to an entrepreneur. And the goal of that entrepreneur is to then build proof of concept before then they go raise what the next category is, what's called the traditional Series A investor. This is probably the most challenging space, because in the United States, there are about only really 100 very active Series A funds. That's it. And by the way, the names change, the seats change, but the actual number of investors in that Series A space are really limited. This is where our 20-year history at SVB Financial Group, at SVB Capital, since we had our business, which suggests that this is where most of the alpha is created, on the A round. And so those Series A investors are kind of like, you really are catching entrepreneurs. They've already had their seed money. They've got something. The product is near built, and product market fit is nearby, but not quite. That A investor is there to scale up that company to get product market fit. And then the last area is growth. This is where you have a lot more data. You have a lot more data points. People are buying the product. There's revenues in the company. You're still losing money, of course, but characteristics of a defined company now are coming very clear. You know your competitive landscape. You know who you're going up against. You just have to know who you are, right? The seed, you're like a partner to the entrepreneur. The A, you become a more institutional board member, and you're more an advisor at this point, helping that company. And then at later stage growth, you're just a momentum investor. You're just backing. You're not going to have as much say in the company. You're just supporting the growth of the company. And it's where you are most comfortable that you're going to land in terms of your investment profile. It's very rare that an investor does all three. You rarely see that anymore. Specialization is sort of the in word right now, where you specialize not only in the stage, but in sectors too. And that's a whole nother conversation, but
all right.
Being a sector expert and being a stage expert are kind of hand in hand these days, if that makes sense.
Awesome. Thank you so much for, again, enlighten us with all that knowledge, right? I think we need another session just in that part for those in the audience that might be interested in becoming one of those three categories, as investors. So moving on to the economic impact, right? So and that question goes for you, John, and Damien. I'll come back to you on a follow-up question in that space as it relates to our Latino community. So what is the social economic impact on the Latino community, John, as it relates to personal wealth, impact as a founder and as a consumer, if you will?
It's massive. I mean, ultimately, as most of you know that have studied, we're going to become the majority in very short order in this country. And we're the most, so we're creating, which is interesting, we're creating the most GDP as a group in this country. When you look at the gross domestic product of the country, it's actually the Latino community that's generating the most of the percentage of GDP growth in this country, which is just us. It blows my mind when you think of that. And most of this growth is coming from small business. It's not coming from large corporates. So the small business engine in this country is alive and well and healthy. The problem is Latinos, as a general rule, have been shut out of that higher growth area. When I tried to describe earlier the two sides between small business and growth companies, and this is no longer tolerable, right? It's no longer plausible to deny a majority group that's generating most of the GDP in this country as a percentage of its population not access to these high growth. I believe it's just a matter of getting capital to these entrepreneurs. These entrepreneurs are there. They exist. The dynamicism in our communities is across the United States. It's alive and well. We're seeing, just as our neighbor to the south, and for many of us, our descendancy, Mexico, the Mexico ecosystem is growing so fast that most US venture capitalists now have a person identified to fly into Mexico to make investments. So the time has come to no longer say Latinos shouldn't participate in this high growth economy. And so it's my job in the remaining years I'm at SCB Financial Group to make sure that not only do we get capital into underrepresented minorities, but then the capital flows to Latinx founders, both men and women founders that we know are there. They just need access to capital.
Yeah. All right. And leading into that, Damien, so as it relates to, how will amplify the Latino voice and representation in the venture capital space benefit all of us?
Yeah, I mean, so I think John hit it smack down there, right? So if growth of the country matters to you, if GDP matters to you, we need to continue to invest in the group that's creating the largest growth, right? So 2.8 trillion in GDP as of the last report. I think we would be the fifth largest economy globally. Less than 2%, and correct me if I'm wrong, less than 2% VC dollars go towards the Latino community. So you put those two numbers together and say, well, if you provided a little bit more fuel to the group that's growing the GDP the fastest right now, imagine what's going to happen next. So that's part A of it. Part B of it is making sure that there are paths for those people that are making some great things happen out there from an entrepreneurship side, the venture capitalists that are Latino that are out there doing it, and all of us amplifying them as well, using our social media voices. The Latino community is actually the most active group on social media across the country. So making sure we're leveraging everything that we have, what we are great at, and that's engaging this family feel and creating that amplification, right? So leveraging our social media, making sure that we're attending events like this just to learn a little bit more. And then here's the key. It's not what you learned through the past hour when you click end. Who will you talk to about this? Who in your family are you going to talk to and say, here's what I just learned about the VC space. Here's what I just learned from an investment standpoint. Let's dig in a little bit more and see what we can do, not just for ourselves, but for our community, for our families, for those around us, right? And if we all do our own little part, the growth potential and the impact will be amazing.
Thank you. Thank you.
Raquel, I would just say on this point is we haven't touched on it yet. The power of networks is how this all happens. So as Damien was talking about, building the first step I would do after today is it's really easy because now there's great tools like LinkedIn, which is a powerful tool. I wouldn't even go anywhere else. Ask yourself, what does my personal network look like, right? And be honest with yourself, right? Is it mostly my friends? Is it mostly college friends or high school friends? Or who are the influencers in my network? And what we've discovered in the time, the bank's 40 years old this year, not all nodes are the same. When you start to create your own personal network, you have these nodes we call them nodes of influence, and take the time to actually map them out on a piece of paper. And you'll notice that some nodes are significantly larger in influence than other nodes, right? And I was going to say, we mentioned one name already, but there's a guy in LA, all of you should track. His name's Sol Trujillo. He's a true treasure of the U.S.
I think we all know Sol Trujillo.
And but it's fun, Latitude. We chose not to invest, which could be a mistake on our part. But I love his fun. I love what he's building. When I think of Sol, he is a big node, right? Other guys are smaller nodes, right? So you want him or his team on your network, right? He's a very powerful node, and he's very approachable because he wants to solve this problem. He's spending the rest of his career, after a very, very illustrious career, as a board member for many major Fortune 500 companies, trying to answer this. So I would say work on your network, but more importantly, when people say, what does that really mean? Build out your network. Show that there are nodes of influence in your network that are more powerful than other nodes. Focus on the big nodes. The big nodes tend to spray bigger opportunities over time. The more you spend on your bigger node, the more success you'll have. That's what I would recommend.
Thank you so much. And I think we are about time for opening Q&A session. So if we can all get, there, we'll go through all those, hopefully fantastic questions, great questions our audience has set out for us. So let's just wait a second and they will be streamlining on the bottom. All right. So first question. Baby boomers, did they lose? And this comes from Sarah Mijares. Baby boomers, did they lose the boat? Did they lose the boat in terms of investing?
I mean, I could start. I'll say I don't. If baby boomers lost the boat, I don't think so. One of the things that I see out there, but I'll say this, one of the things that I see out there a lot that I'm trying to get my arms around a little bit better right now is baby boomers that are entrepreneurs, built their businesses, right? And now are trying to figure out who are they handing their businesses to. And I think there's a great opportunity for baby boomers to hand those businesses over. So the whole concept of entrepreneurship through acquisition, right? To folks that are looking to buy into a business, where the baby boomers are able to pass it over to the next generation of folks that wants to take that and continue to grow it, potentially if their kids don't want to take that business themselves. So I don't know if they've lost it in terms of investing, but I will also say I'm not an expert in that space either, but that's just one of the areas that I'm seeing over there in terms of the potential to sell their businesses and do pretty well with it.
All right. So we have another question coming in. How do you manage to get comfortable with risk assessment versus ROI before investing?
Well, that's a really great question on venture, and especially in venture. Typically you targeting 20% IRR returns on your investment. And remember, I told you it's a 10-year life fund.
Mm-hmm.
And so by the end of that life, you should have aggregated to 20%. That means you're going to have some write-offs in your portfolio. That's why portfolio management is so important. You have some write-offs, and then you're going to have big multiple return winners, maybe one or two in a, just say in a concentrated portfolio of 10 investments. 2 should deliver all your return, your alpha. 2 are probably going to be a loss, a write-off, maybe even 3. And then in the middle, you're just going to kind of muddle through in the middle. They're just going to be kind of return on cash. But it will tell you this portfolio information here is really critical. We talked about the movie, that movie about with Damon, that Damien mentioned, right? That was he was a public equities trader in that movie, not a private. In the private markets, it's very difficult to find information. There's no public information about these companies. And so it's really hard to assess these companies. So it's really important that you have sources of intelligence around these companies by surrounding yourself in the ecosystem. Right. Board members that you know, lawyers that you know, friends of friends, and competitors are the way you sort of aggregate your intelligence around portfolio construction. But I will share with you, it's hard. And then there's just a great amount of faith as you rat out these investments over 10 years. I will tell you that at seed, the chance of you knowing your successes is near zero at seed. At A, they estimate it's about 50%. There's a funny story that's now public that Mike Moritz was about to sell Google because they were so disappointed with the results in the early days at A when they made the A investment. They were going to sell it. Can you imagine that? Nobody wanted to buy it from them.
And look at them now.
I mean, right? So you just don't know. There's a lot of information you just don't know. And that's why you have to take a very professional portfolio view of your investments and just have this sort of time series that you could eventually lose the money if need be. That could happen.
Yep. All right. And that leap of faith, right? So going into our next question from Davey Wilson. So Damien and John, thank you for taking the time for this. We'll appreciate your insight on how does a career in VC align with your own basket of values? Great question.
John, I'll let you. So I don't have a career in VC. So John, I'm going to leave this one up to you.
Well, look, I would just say that right now there's a lot of talk about ESG, right? This is another big definition we should put on the board, that environmental, societal, and governance is sort of the rage right now. But at the end of the day, it is trying to align values to investing. Something we really haven't done. What are we learning today? We're waking up this morning learning that the big social media companies, let's be honest, weren't really thinking about the good of society as they were scaling up. They were sort of focused more on return, right? They were top revenues and returns for themselves. And it's not about painting a complete broad brush with Google or Facebook, but we sort of know the actors here were probably not living their best values. I think this generation, the folks that are on the line today watching, I think you're a very different generation. I think you are leading with your values. And the way I'd answer that question is you can build a career that's value-oriented in venture capital. People used to call it impact investing. The truth of now today, impact investing and venture are merging. They're kind of coming together. There, you can return alpha. You can create powerful return on investment portfolios by investing in value-based companies. And we're seeing it all over, especially on decarbonization, especially in healthcare. So if you are values-oriented, those two sectors in particular, right? Healthcare and decarbonization or climate change tech are really leading the way to basically live your life. And that's what, for me, I think I shared it. I spent on my 27th year in the last few years, whatever that is, I have another 7-8 years. I want to spend focusing and leading with my colleague, Angela Lovelace at the bank, our Chief Diversity Officer, to change the color of venture and put capital in the hands of folks that have not had access to capital.
Yep.
That's how I'm sort of living my investing career.
Amazing. I have a backup question to that. So let's, someone in the audience says, I want to start a company. I have a great idea, but not product. How do I start reaching out for seed investors, and how should I prepare to engage with seed investors? And again, John, that's for you.
Damon, you too, you have access to your networks. I mean, maybe I ask Damon the question. Damon, how did you get access to Samara? How did she come?
So through the network on Angeles Investors, and through Samara spoke at an Alpha New York session similar to this about venture capital. And it was Latina focused. And so she was able to give some great insights and information about that there. And it opened up that network in that way. So what I tell folks is you got to be willing to step into traffic, right? Not literally, figuratively, right? You got to be willing to get out there. If you feel you are too shy to be out there, I'll have a shy off with anybody, right? I prefer, I asked my wife out by throwing a letter at her. That's how shy I am. Literally, that's how I asked her out. And so my point is this, you get out into the ecosystem, you have conversations, you have discussions, people are then going to be able to help you start. You don't have to pitch them your full idea. You do that too early, they can say something to you. You might be in a stage of the idea where you're vulnerable to somebody saying, no, that can't work. Then all of a sudden, the seed of the next big thing could be damaged because you heard someone say, no, that's not a good idea, right? So you just go out there, you're having these conversations. I recommend putting your ideas down on paper, creating a business model canvas if you want to use a tool to get something sort of laid out. And then again, get into the ecosystem, have conversations. Through those conversations, what you're going to start finding is, to John's point earlier, the different nodes that you are part of, right? The ones that you've been part of for years, start getting into ones that you've never been part of before, because it's the space between those nodes that's also going to add to the opportunities that you have to potentially get some investments. But the key piece up front is structuring the idea well enough. And then number two, helping the person that you're pitching the idea to see how what they can bring to you can be that missing piece to help you succeed. So now they see themselves in you and in your idea, and you start building some momentum moving forward. Those are some of the thoughts that I have for it.
Yeah, Damon, I love that. I'm going to remember that one. Get into traffic. I will say there's a general rule of thumb. I think that was from Ruben, that you're not going cold calling on seed managers is really challenging. It's very difficult. In fact, we actually show the statistic. If you get introduced to an investor warmly, your chance of success goes up something like 70% materially. If you just submit an online request, your chance of success is near zero. Mm-hmm. And so you're getting into traffic, creating an advisor pool around you, and asking those advisors just blatantly, like, advisor, can you help me? Can you assist me? Can you introduce me someone in your network that you know that would look at this idea? Because I love what you said, David. People want to help you succeed. Like, they want to help you succeed. You just got to tap into the right person that you connect with on that level. So that would be my only add to what Damon said. Get in the traffic, yes. And two, find people that would want to then sponsor you into the idea and get you in front of investors that they know versus you cold calling investors, which would be very low probability of success.
All right. Thank you so much. I think we have one last question from Ruben Aguirre. Besides expanding our network, what other steps will you recommend after today's presentation?
So I'll start, and John, you could close out, because I'm curious to hear what you have to say, because I'm going to take notes on what it is that you said. So my thing is study up, right? So expanding the network and then studying up. I'm a big believer in continuous learning. And so I'll say this, SVB, SVB has a phenomenal website that talks about a lot of the terms that we went through, a lot of the concepts with respect to venture capital. Even if just starting by going to that site, understanding a little bit better about the area, and then having some conversations with it, identify a group that you want to go ahead and engage with that's going to allow you to continue that learning, right? Those that are around, they say you're the average of the people around you type of thing. So you want to make sure that you're starting to build an ecosystem around you. That's the networking part. But now you got to take action on that. You can't just sit still by connecting a few times. You now need to go out there and keep moving.
The only thing I would add, and as we wrap up, is look, this is counterintuitive, but you young people now, on average, stay in your job. This is statistically alarming, right? During 2010 to 2022, the average length of stay was less than 36 months. Post-COVID, it's less than 2 years. So you're moving around a lot, which is one thing is interesting. You get to see a lot, but you're not setting any sort of roots anywhere either. So it's my only then advice, because I'm not going to try to change the trajectory of your approach to way you want to build careers versus mine, which is sticking with one brand for 27 years. But I will say this: become sector experts, create expertise, make a decision on expertise, because that will propel you much faster. At the bank, we have 8 sectors, 3 healthcare sectors, 5 technology sectors. Whatever it is, whether you love climate, or you love space tech, or you love enterprise software, or you love digital health, my only feedback would be, as you think about beyond networking, is build that core expertise in something, and then keep learning, this continuous learning, because we're just scratching the surface on new paradigms, whether it be, you're hearing about AI now, but space, the hardware industry, AV, the electrification of our grid. I mean, it's very exciting stuff for this generation. More exciting, I might argue, than the last several hundred years here. So good luck.
All right. And that's it, folks. We about to on the top of the hour. And so I want to take this opportunity to audience, join me into, thanking our amazing panelists, John China and Damian Rivera, for these, informational, educational conversation about venture capital. I also want to thank the team, SVB, and as well as Alpha, for contacting me to moderate this panel. Super excited and hoping that we can continue to have more of these educational opportunities live. And to the audience, do not worry if we did not answer your questions. Those we will provide some answers via the channels, whether LinkedIn or Facebook. So you will get your questions answered. So thank you so much, everyone, for your time. And I hope this session was educational, like I said, and filled with good insights.
Thank you.
Have a good day.